And it's the last edition for the week. Jimmy, welcome to Business Morning. I'm Ladi Williams.
I'm Chimeze Obi Iwago. Good morning and thank you for joining us. Well, oil prices fell this morning as a collapse in bond prices led to gains in the US dollar, and expectations grew that with oil prices back above pre-pandemic levels, more supply is likely to come back to the market. US West Texas Intermediate crude futures dropped 36 cents to $63.17 a barrel, giving up all of Thursday's gain. Brent crude futures for April fell 18 cents to $66.70 a barrel, following a 16-cent loss on Thursday. The April contract expires today. The more active May contract fell 32 cents to $65.79. Now, despite the drop in prices, both Brent and WTI are on track for gains of about 20% this month, as markets have grappled with supply disruptions in the United States, while optimism has built for demand to improve with vaccine rollouts. Investors are betting that next week's meeting of the Organization of the Petroleum Exporting Countries and Allies, together called OPEC+, will result in more supply coming back to the market, given the recent jump in prices and expectations that demand will improve as pandemic lockdowns ease heading into the Northern Hemisphere summer.
And the Minister of Finance, Mrs. Zainab Ahmed, believes Nigeria cannot effectively make progress unless it borrows to fund the building of its infrastructure. She said this while responding to criticism regarding high levels of borrowing by the country at the State House. Mrs. Ahmed adds that the nation's borrowing rate is not unreasonable, but the real challenge is scaling up revenue. Do take a listen.
Central at this special media briefing in the State House is Nigeria's economic recovery and growth trajectory. Addressing concerns about Nigeria's excessive borrowing, the finance minister admits it is not misplaced, but explains that Nigeria cannot tackle its infrastructure challenge without resorting to external help.
The level of borrowing is not unreasonable, it's not high. If we say we will not borrow, and therefore we will not build rails and major infrastructure until our revenue rises enough, then we will regress as a country, we will be left behind, we won't be able to improve our business environment, and our economy will not grow. So we just need to make sure that when we borrow, and the president has ensured that we're doing that when we borrow, we're applying the borrowing to specific major infrastructure that will enhance the business environment in this country.
Total borrowing of the country as at 31st December 2020 is nearly 25% of the GDP. But perhaps the encouraging news is that the non-oil sector contributes 95% to the nation's GDP.
The oil sector contribution is just 5%. So by any term or any description you take it, the Nigerian economy is already diversified. But what we want to do is to increase the quantum, the size of investments and revenue that the non-oil sector yields to the Nigerian economy.
A supplementary budget is also expected to provide financing, according to the minister, for the COVID-19 vaccination rollout by next week.
But what we have in the budget is not enough. So we are working with the health authorities to prepare a plan that will be taken to, and we have already Mr. President's approval to do this, that will be taken to the National Assembly for a supplementary budget specifically for COVID-19 vaccination.
The finance minister dropped the hint that she would seek approval at the Federal Executive Council to compel ministries, departments and agencies to purchase only locally made vehicles. From the presidential villa, Gloria Umezuke, Channels Television News.
Well, talking about the debt there, when you talk about the debt to GDP ratio, yes, perhaps we could say it's not high, but debt to revenue, of course, is high. But then what matters is it's not even the amount of money we are borrowing or how much debt we owe, but it's what we do with those monies. Are we channeling them into developmental projects? That is what matters. And if government can actually assure Nigerians that whatever money that is borrowed is being put to proper use, I think...
We can see it.
Absolutely. Yeah. I think there will be some kind of confidence there. Okay, Nigeria is moving in the right direction economically, but its movement is not fast enough. And this is according to the Deputy Secretary General of the United Nations, Mrs. Amina Mohammed. Speaking during a courtesy visit to the Ministry of Industry, Trade and Investment in Abuja, Mrs. Mohammed explains that there are challenges in Nigeria, insisting that the country's economy has a lot of opportunities.
I saw along the way is really a country that is growing, that is moving in the right direction. Is it fast enough? No. Is it in the right direction? Yes, it is. And the challenges still remain with security, with our social cohesion, with the social contract between government and the people. But people are working on it, and this is a country still that has many opportunities. What we need to do is to just get together to do more from the local governments, from the states, to the federal level. It cannot be left to any one tier alone. So the common agenda for us globally is the SDGs, the Sustainable Development Goals. There is nothing there that Nigeria is not doing, and I think we've seen in this ministry that what you're doing to create jobs, to improve the economy, which means that we will get the revenues through much of the work that you're doing that will allow us to reduce poverty, to look at inequalities, to begin to pay for services. So that you're contributing greatly to the outcome of what everyone wants to see for a more prosperous and peaceful Nigeria.
And the federal government has announced plans to hire an asset manager for its new Infrastructure Corporation Nigeria Limited, Informal, with designed to raise as much as about $37 billion or 15 trillion naira to help fund projects across the country. This is coming less than 2 weeks after President Muhammadu Buhari approved a 1 trillion naira initial seed capital for the infrastructure company, which will be set up under a public-private partnership. Some firms, such as KPMG, Price Waterhouse Cooper, McKinsey, and Boston Consulting Group have already expressed an interest in getting the role of asset managers for the company. Analysts say Nigeria needs at least $3 trillion over the next 30 years to close its infrastructure deficit.
And still talking about the state of Nigerian economy, well, trade is one of the sectors that recorded negative growth in the fourth quarter, GDP contracting by 3.20% year-on-year in real terms from minus 12.12% in third quarter of 2020 and minus 0.58% in the fourth quarter of 2019. While in real terms, trade's contribution to GDP was 15.46% in 2020, lower than the 15.99% it represented in the previous year, but higher than the 13.88% recorded in the third quarter of 2020. We'll be having this conversation with the Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, next. Right, Dr. Muda Yusuf joins us now for this conversation. Thank you very much, Dr. Yusuf, for joining us on the program.
Great
it's a pleasure.
Thank you.
Right, the trade sector is one of the sectors that have contracted over the past 4 quarters. Let's first, examine the significance of this sector to the economy.
Yeah, thank you very much. The trade sector is a very, very important sector of the Nigerian economy. Next to agriculture, it contributes the highest to the nation's GDP. And on account of employment generation, again, next to agriculture, it contributes the highest to employment. The figures we have from the Bureau of Statistics as of 2017 indicates that the trade sector accounts for about 60 million jobs. We have about 41 million MSMEs, according to the NBS. About 99% of those MSMEs are micro-enterprises. So between them, and most of these micro-enterprises are actually in the trade sector. So they account for about 60 million jobs. So that is very significant. So if we are talking about creating jobs, again, that is one sector that can easily catalyze job creation. Then the sector also is a major bridge between those who are producing and those who are end users or those who are consumers. Because it is not possible, for instance, for a manufacturer, no matter how big you are, for you to cover the entire country. I mean, we are talking of a population of 200 million people. We are talking of a very vast country. We are talking about a local government, over 700 local governments, you know. So it's so significant, and it impacts every other sector. Whether you are talking of agric, you are talking of manufacturing, ICT, you need those who are trading to be able to connect you to those who will consume your products. So it's a very, very strategic sector.
The trade sector has contracted for about 4 quarters now. What would you say is responsible for this poor performance?
Well, the trade sector has contracted because, first, most of the items that we trade are imported items, apart from agricultural products. All other items are almost 90% imported. And you know what has happened to issues of international trade and imports? First, the exchange rate depreciation has had a major impact on these goods that are imported. It has affected the prices of these products. And you know what happens when prices go up? It affects demand, it affects sales. That is one. Secondly, within the foreign exchange management environment, we also had the liquidity challenge in the foreign exchange market. So much so that even at some very high exchange rates, some people that want the foreign exchange could not get it. That's what we talk when we talk about. I mean, that's what we mean when we talk about issues of liquidity. So that again was a challenge, not just for the traders, even for those who are producing, because you need to produce before you even sell.
So, absolutely.
We know what a lot of manufacturers have been going through in the past 1 year, as far as this liquidity challenge in the foreign exchange market is concerned. That has also contributed to the availability of products to sell. And once there is a shortfall in supply, it also affects price. And it affects the performance of the trade sector. Then there's also the issue of logistics. This is a very big country. For the trade sector to perform well, the logistics must be sound. I'm talking now about primarily transportation within the country. So that is also a major constraint. Because if you want to distribute goods around the country, you need vehicle, you need good roads and all of that. We still have a whole lot of limitations around that. And that, of course, is affecting the cost of transportation.
And I'm sure the
then, of course,
hike in PMS also.
The PMS and all of this. Yeah. Then, of course, there is also the issue of insecurity. I know of some big companies that because of the growing insecurity in the country, they have closed some sales outlets in some parts of the country. Their salespeople no longer go there. And the scope of insecurity is expanding. So that is also taking a toll on the trade sector. Then we have issues around port logistics. Just as I said, the bulk of the things we trade are imported. And if you have the kind of problem that we have, and it has been there for quite a while, around the ports, getting into the ports, the gridlock, clearing the cargo, dealing with all the multiple agencies at the ports, dealing with extortion and corruption issues, getting out of the port, that is also a major problem. So there's a whole lot of frustration around the issues of trade. Then, of course, we also had the border closure.
Absolutely.
You know, most of the trade that takes place within the sub-region are done by all these informal sector players, most of them women. So the border closure also had a major effect while it lasted on trade. So these are some of the factors that had led to the contraction. And we had this contraction for the past 4 quarters.
Yeah.
As far as trade is concerned.
So how inclusive would you say this sector is?
Well, to the extent that the sector employs a lot of people, you can say that it's a very inclusive sector. Because the principle of inclusion is to determine the degree to which there is a lot of indigenous participation in a sector. We cannot compare the inclusion in trade to the inclusion in oil and gas, even though a lot of revenue comes from there. But in terms of indigenous participation, in terms of the number of people participating, it's very limited. You can say the same also for even some areas like maybe ICT and the rest of them. So the level of inclusion in trade is high. There is hardly any street in this country that you go that you not see a retinue of traders.
But the sector
selling one thing or the other.
Seems to be dominated more by informal players.
Well, that is the nature of the sector, of the sector generally, not just in Nigeria, but generally even in Africa. First, the unit of investment is very small. I mean, don't forget, I said we have over 40 million of them. So some of them have maybe total capital of maybe some 10,000, some 50,000, very small units of investment, catering for the various levels of people that we have. And more importantly, catering even for the poor. Because by their own business model, they have a way of breaking the bulk down into units that the average people can buy.
So can that now be said to be a problem?
Well,
and if it is, how can it be corrected?
No, it is not exactly a problem. But it's a problem in the sense that when you have an economy that is predominantly informal, it's also not good. It's not good from a regulatory point of view. Because when you look at issues of infraction of regulations in the economy, it's preponderant among the informal sector players. Because some of them, you can't trace them. You don't know where they are. They don't have records. They don't have standards. They don't respect quality. A whole lot of issues around the informality of the economy. And even data, because you need data to plan. You struggle to get data from the informal sector, and it makes, it creates a problem for policy. So it is good to have policies in place to encourage the transition of those in the informal sector to the formal sector. But for that to happen, we must look at the totality of our regulatory space. Because if the regulatory environment is too hostile, if it is not investment friendly, a lot more people will remain in the informal sector, where there is very little regulatory effectiveness. You can't capture them, they are not in your data and all of that. So they just carry on with their business. But that is also not good for the economy. So we need to look at the regulatory environment so that we don't create situations where it will be more convenient for investors or for all these small SMEs to remain in the informal sector than come into the formal sector. I mean, we have seen companies even on the stock exchange delisting because of the rigor of compliance issues of being a quoted company.
Yep,
some of them just decide that, well, this hassle is too much. They just get out of the exchange.
Yeah.
So the compliance issues, the regulatory environment, all of these things are very important in encouraging a transition from the informal sector to the formal sector.
Okay, we've looked at some of these challenges in the trade sector. It's important for us to also look at some policies that can be put in place to really drive growth in this sector and perhaps look at some of the things government has actually done in this sector. So I crave your indulgence to please stay on with us. Okay, Dr. Yusuf stays with us while we'll take a quick break. We'll be back in a moment. We're still talking about the trade sector, and we'll still have with us Dr. Muda Yusuf, the Director General, Lagos Chamber of Commerce and Industry. Thank you very much, Dr. Yusuf, for sticking on. Yes, so we've talked about the challenges facing the sector and why the sector has been contracting in the past 4 quarters. Okay, so what for you can the government do to really accelerate recovery in the sector?
Well, we have to look at this in an integrated manner, because trade is part of the total ecosystem of the investment environment. If the manufacturers are not doing well, the traders cannot do well, because it is what is produced that will be sold. It is the cost at which the manufacturer produces that it will sell to, that they will sell to the traders. So we need to fix the production system in order to ensure that we have a better environment for trade, particularly from the supply side of their operations. So we need to support the manufacturing processes. We all know what the issues are with manufacturing, the infrastructure, the power, the document, the regulation, the cost, the foreign exchange, and all of that. That is key. Then we also have agriculture. A lot of trading takes place in agricultural products. The agricultural sector itself must be stable. We need to save them from all the issues of insecurity so that they can produce what the traders will sell. That is talking domestically. Now, there is also the international trading component. We need to continue to improve on our international trade processes. There is still a whole lot of reforms that needs to take place, around the international trade process. We know what the challenges are with the ports. As we speak today, those challenges are still there. We know what the challenges are with the customs, the documentation, the discretionary powers, which are exercised most times to the detriment of investors and importers. Those issues are there. Then, of course, we have the issues of logistics, domestic logistics, transportation, energy costs. The government is already doing a lot around the issues of the railway system. That is going to have a major impact. If from any part of the country you can just load your goods into the train and off you go, it's going to crash the transportation cost significantly. So these are the key things I think we can do. And of course, we talk about the issue of the forex. The forex issue is a cross-cutting issue. It's affecting practically all sectors. And if these sectors are not performing well, the trading sector, which is like the downstream segment of the economy, cannot also do well. So we need a foreign exchange environment that is also very seamless, that is also more investment friendly, that is more liquid. Of course, the issue of exchange rate depreciation is a function of productivity. We still have to continue to grapple with that. We need to scale up productivity. The Minister of Finance in your background report was talking about how we are doing well in the non-oil sector. But what is the productivity in that sector? You have a non-oil sector that is accounting for 95% of GDP and is contributing less than 5% of foreign exchange. Something is fundamentally wrong. And all of these things also speaks to the quality of employment in those sectors. Because if you have a sector that is grappling with a lot of productivity problems, it affects the quality of jobs in those sectors. ICT or oil sector accounts for maybe 5%, 3% respectively of GDP. But can you compare the quality of employment in the ICT sector or in oil sector to what you have in agriculture? No. So it's not enough to have this big GDP. the GDP must be something that first, very productive, very progressive, you know, and revenue generating. That is what can bring value.
All right,
You talk about servicing debt and all of that. You talk about it. Yes, you don't use GDP to service debt. You use revenue to service debt.
Absolutely.
So if you have a big GDP that is not generating revenue, it cannot support the debt service. So this is why some of us fought this whole idea of saying that debt to GDP is low. If it is low and the GDP cannot support the funding or the servicing of the debt, then we have an issue. So productivity in the non-oil sector is very, very important. We are talking about Continental Free Trade Agreement now. What are we going to put on the table from the non-oil sector? What are we going to put on the table? Look at the basket of our exports. It's over 90% oil and gas. What are we going to put on the table? We have these issues, but if the productivity issue is not addressed, then this economy will still continue to grow. We will still continue to struggle with recovery.
Okay, you talked about the issues and the ports, and well, the MPA recently just introduced what it calls electronic call-up system, and this is supposed to take effect from tomorrow, and is expected to help address the issue of the gridlock. For you, the Lagos Chamber of Commerce and Industry, I mean, what's your take on this particular initiative?
It's a commendable initiative. It's a commendable initiative. But, you know, we have so many fantastic initiatives on paper.
Execution.
The test of
becomes a
what
problem.
value this will bring is in the implementation of it. Even before now, we have been told that we have electronic call-up system and all of that. These things have not worked. So we are hoping that this new initiative will work and we'll see some improvement around this issue of gridlock. But the gridlock issue is not just an external issue. It's not just about the traffic to the port. It's also about the processes within the port itself. It's about the facilities that our terminal operators also have and how efficient they are. It's about documentation processes with the customs. It's about some regulatory agencies that are within the ports that put all sorts of obstacles on the way of importers. So the approach has to be holistic, and we must realize that. If you have the call-up system and the trucks are lining up and they cannot go into the port because of all this heavy bureaucracy and sometimes extortions within the port, we still be back to square one. So we need to tackle these things holistically. We need to reform the processes. We need to reduce discretionary powers of all these people that operate in the port so that you can have a process that is seamless. We need to use technology within the port. As we are speaking now, for a few years, we are still examining cargo manually. How many cargo can you examine manually? We have thousands of cargo that come into this country. So these things affect the speed of the internal processes within the port. So these things have to work together. They have to work in tandem for us to get the desired outcome.
Right, talking about, growing this sector, the NPA certainly have a role, to play in all of this. So what do you think the NPA should do or is not doing and should start doing now?
Well, the NPA is like the landlord of the port. The scope of its intervention is also limited because the port has been concessioned. The NPA doesn't have powers over a number of agencies that are operating at the ports. So the NPA has to work in conjunction with other agencies at the ports, and particularly the Nigerian Shippers Council, which is now the regulator, economic regulator at the port. So there has to be that synergy. Because the MPA cannot give instruction to customs, or to NAFDAC, or to SON, or to terminal, or maybe to some extent the terminal operators, or some of the other concessionaires at the ports. So it has to be something that is done as a collective between the MPA, the Customs Service, the Nigerian Shippers Council, all these agencies at the ports, and all of that, so that we have a system that works. The port system is such that no single agency can really make the kind of impact that we'll expect. And I know that the Shippers Council is trying to rally all the stakeholders at the port to ensure that we have a much better environment.
What is your outlook for the sector?
Well, the outlook is bright to the extent that the macroeconomic environment improves. Because it's a function of what happens in the environment. If the macroeconomic environment improves, I mean, we are beginning to see some good development around oil price. If that is sustained, that will have some positive impact on the macroeconomic environment. So we have some positive impact on the exchange rates, both the rates and the liquidity. That will help trade. If we're able to reform some of these processes that we talk about at the ports, that will also impact positively on trade. If we're able to do a lot more in terms of logistics, domestic logistics, removing some of these checkpoints, because the checkpoint is still a problem. You need to see all these poor traders that are moving food products from one part of the country to the other, the kind of challenges they face with some of these security checkpoints. It's still a major problem. Extortion and all of that. That is also affecting trade. So we need to deal with all these investment climate issues, to ensure that we have a better environment for the trade sector.
Now, sometime last year, the central bank had announced a new price verification exercise for imports, despite the pre-inspection that is already in existence, and also abolished the third-party Form M payment. How have that really played out? How did that support, that sector?
Well, the policy on the third-party payments has been reviewed because it was causing a lot of disruption within the economy, especially among the SMEs that have to import, because the SMEs couldn't import directly from the original producers. They import through intermediaries because of the scale of their imports. So the CBN had been magnanimous enough to review that policy. The price verification, I think that is still on. But we have such issues because we still have all this multiplicity of rates in the foreign exchange market. That is what is leading to all these issues about people not want to declare correct prices, over-invoicing and all of that. If you normalize the market, I'm talking about the foreign exchange market, all those challenges will disappear. If there is no more arbitrage, if there is no more differential or significant differential in those rates, all those challenges will disappear. So I think that, for me, is a much more sustainable way of dealing with such issues. The same thing with the NSP. The NSP forms concern the non-oil exports. It's the same issue of differential in rates. The rates you give to the exporters is different from the rates that the market is offering. So it creates all sorts of things because people feel that they are not getting a fair deal for their transaction. So the way to normalize all of that is to ensure that we normalize the foreign exchange market itself. And we have a rate that is at least seen to be market determined. So that is what
Thank you very much. Thank you so much, Dr. Yusuf, for sharing your time with us
Thank you.
today. We do appreciate that.
Thank you. It's a pleasure.
Okay, we will look at the market, but just before we do that, let's also take a quick look at the global oil market today. Of course, prices fell this morning as a collapse in prices led to gains in the US dollar, and expectations grew that with oil prices back above pre-pandemic levels, more supply is likely to come back to the market. US West Texas Intermediate crude futures dropped 36 cents to $63.17 a barrel, giving up all of Thursday's gains. Brent crude futures for April fell 18 cents to $66.70 a barrel, following a 16-cent loss on Thursday. Okay, let's look at the markets now. Ini, what do we have there? Still red?
Yeah, still red, still red. Well, before we go into the markets, remember yesterday, Eddie told you about the story, Oando gaining 10% after Engineer Judua helped them to win a case in court. Well, Oando decided to follow up and continue the story with SEC, you know, in court. But unfortunately, this time it wasn't so good for them because in a federal high court in Abuja, Justice Giwa Ogumbanjo declined jurisdiction. And this is all about an investigation which SEC is carrying out on Oando, started in 2017. And they are saying, well, that SEC did not follow the due process. Let's see how this is affected, because with this, we see that the oil and gas sector went down yesterday. We have Muhammad Jamiu. He's a head securities dealing of APT Securities and Funds Limited, to tell us how come in one day we have 10% increase, and then in the next day we see the oil and gas sector in the red again. I think we will have Muhammad Jamiu join us in a couple of minutes, but well, before it comes, we see the all share index went down by 0.31%. The equities cap, close to 21 trillion naira, but still in the red. Volume value deals all in the red. And yesterday, the most traded stock by volume was Transcorp. Transcorp led this, and the most traded stock by value was Zenith Bank. It had 637.59 million naira. Surprisingly, like we said, the oil and gas went down 0.15% after a 10% increase led by Oando following that judgment. The insurance sector is the only one that added 0.24. Well, we see the insurance hasn't been in the green for a long time, so we say congratulations to the insurance sector. And then we go to the unlisted securities market, and we see that the index is 713.91. The market cap at 512.24 billion naira. There were only 2 deals in the unlisted securities yesterday. Okay, so we have Mohammed now. Hello, Mohammed. Good morning.
Good morning. The pleasure to be here with you.
Good to hear from you too. So we see the case with Oando gave them 10% increase in their share price, and then the very next day we see the sector in red. What happened?
The issue is still relying on the issue of the shareholder being able to trust Oando again. It's a trust deficit that has affected the shareholders. So the news came in. As the news came in, some that are still optimistic about the company, they quickly rushed the stock and moved the stock up. When the information filtered into the town, then people try to analyze to see the prospect and other things around the company shares. So after the analysis, some people believe that it's not something they think they can invest in. What I think happened is just a trust deficit that they are having, the shareholders are having in the company currently.
Oh, okay. And then we also saw the insurance sector also, for the first time in a long time, in the green.
Yes, insurance company. You know, the issue with insurance company is that that sector is not that active. What I mean is not active is that when you see a particular stock gained in that sector, you will see the sector moving up into the green because of the fact that other stocks are there's a bit kind of illiquidity in that sector.
Okay. All right. Thank you so much, Mr. Jamiu, for joining us. And I think that's as much we can take in the market. Back to you, Chimi and Ladi.
Thank you very much, Anyway, let's just hope and see how the market goes today. Let's just hope for the best. For now, we'll take a break, and when we come back, we do an opening call to London. All right, let's talk to Juliana now. Good morning, Juliana. Good to see you.
It's nice to see you, Chimezie. Not too early to say thank God it's Friday.
Yeah, well, we can still say thank God it's Friday, even though I'm going to see you later in the day. Anyway, the corporate world is becoming split over home working. The chief executive of Goldman Sachs has signaled his determination to get his bankers back behind their office desks, calling home working an aberration that must be corrected as soon as possible. What is the thinking of those in London about this view?
You're right, Chimezie. It's definitely a split in the corporate world. You've got the likes of the tech giants in Facebook, Microsoft, Google, asking all of their staff to work from home permanently if they want to, although you'd have to accept a pay cut if you'd like to do that. And then we heard from David Solomon, the chief exec at Goldman Sachs, joining the chorus of calls, similarly to the likes of JP Morgan and Barclays, saying they're desperate to get their staff back into the office, that they just don't think the productivity is as good as when you work from home. But I think particularly with what David Solomon was saying is that young recruits that come into the firm need the mentorship. They need that one-to-one time with their peers. Otherwise, they just won't be as competitive as others around the world. Here in the UK, it appears as if we're on the David Solomon side because as soon as Boris Johnson announced his roadmap out of lockdown on Monday, the commercial property firms like Land Securities and others, they saw their shares rise. So I think in London, the markets are certainly going to be welcoming a return to normal work.
And the National Audit Office says carbon emissions from passenger cars across Britain have fallen by just 1% since 2011, despite a steep rise in the sale of electric and hybrid vehicles. Looks like UK is far from achieving its target of zero emissions by 2050.
Well, yeah, if you look just solely at the details released by the National Audit Office, which was only really looking at the sale of electric cars, yeah, certainly Britain has a long way to go, especially because just in November, the British government said they will no longer be selling any petrol and diesel vehicles. That's 9 years away. Yet at the moment, last year, only 1% of cars sold were electric cars. But if you look at the broader picture, Britain is, head and shoulders above the rest of the world when it comes to cutting emissions. Last year, for the first time since 1882, no coal was used to put energy into people's homes. That is a massive a shift in focus for the British government. In fact, that actually cut emissions down by 40%. So 2050 is still 30 years away. And I think, not wanting to quote Boris Johnson, but Britain is certainly leading the rest of the developing world in cutting net zero emissions or reaching that target.
Now, as part of lockdown easing plans, nightclubs are expected to reopen in June, but the question is if they can survive.
Good question, actually. And then one, if you will allow me to plug Channels Business Global, which was on at 4:30, because we're actually speaking to DJ Abbas, who is a popular entertainment consultant and DJ. And I discussed that with him because, as you're right, nightclubs, they have really suffered. They're probably one of the only venues that wasn't able to open during the opening in the summer. And when June the 21st does come around, they would have been closed for 15 months. Really a critical issue because they contribute about £6 billion every year to the British economy. They don't feel as if they've had enough assistance. And according to some observers, by the time June 21st does come around, 50% of them will not be able to open because they've lost their jobs. About 30% of people that work in the industry have also been made redundant. So it's a crucial point. And there, of course, is a caveat. Even though we're all looking towards June the 21st. The Prime Minister has said that is determined by the successful rollout of the vaccination programme and the reduction in hospital numbers. So we'll have to wait and see. But you can see also the interview at 4:30.
Channels Business Global. We'll watch out for that. All right, in the meantime, I'm sure you're going to give us more update later in the day.
Thank you.
And to the crypto market now. Ladi, what's happening in that space?
Yeah, Bitcoin trading at 46K this morning at 8 a.m. Market is not looking so good. It's a sea of red, really. Bitcoin going down, altcoins going down. Market cap at $1.4 trillion, down 8.32%. 24-hour volume, $159.62 billion. That's up about 4.68%. Bitcoin dominance, 61.65%. The altcoins are not doing well at all. Price of Bitcoin at 8 a.m., $46,124. I also saw it later on at about 46,000 on the dot, down 8.59%. 24-hour volume, $61.55 billion. And you know the problem is when Bitcoin is surging either down or up, the altcoins suffer. Some traders must be losing a lot of Satoshis right now. 1 inch, decentralized exchange, $4. This is about 16% up this morning, near $4.13, up 13%. ENG gaming platform, that's been running for a while now, 58 cents, up about 3.07%. Let's look at the losers here. Yeah, XVS, $52, down 21%. That's what most of the alts are doing this morning. Most of them down 20%, 30%. STX, 91 cents, down 20%. Let's talk to Olumide Adesina now, investment and market analyst. Hello, Olumide, how are you doing?
Yeah, I'm fine, Ladi. Yeah, it's nice to have you on the show again.
Great to have you. I see Bitcoin getting lower lows, lower highs. The market cap dropped by $120 billion. Is the bull market over?
No, I don't think the bull market is over. I just think what really happened was a market correction. Don't forget that in the past few weeks, the market has been accelerating at a pace not seen in the financial world. And don't forget that some institutional investors felt the need for them to take some of their profits off the table. So what really happened was that on Sunday, after it got to its all-time high, that's talking about Bitcoin, about $58,000, some market experts took their positions out, and it came down to 50. And Janet Yellen, who happens to be the most powerful financial leader in the fiscal world, gave a bias against Bitcoin and made some investors shaky. So some investors kept selling their positions, but albeit it may, some other investors started cashing in. MicroStrategy recently announced that it has bought over 19,000 Bitcoin, and their holdings are about 4.5 billion. So what we are really seeing is that as the price is dropping, some institutional investors are seeing that opportunity as a buy.
So I guess it's safe to say the FOD is pouring in at this point.
Exactly, and you could see that even just as I'm talking to you, I've seen 3 institutional investors keying into Bitcoin assets because it's dropping so fast. So that's why we advise retail investors that you don't keep a higher percentage of your funds, because the volatility in the crypto market is very crazy. But still at that, the Bitcoin market has performed better than any stock market in the world. Actually, even as it stands, its year-to-date performance is over 70%. And tell me which stock market has given that kind of return. So
exactly.
It's just that the volatility is very, very high. So it's not suitable for retail investors that have low amount of funds, because that will already liquidate. And we saw that yesterday. About 106,000 traders got their position liquidated because of the huge number they had. Yeah.
And Coinbase going public, what's the impact for the crypto market?
Oh, that's a big one, and that's a very positive one. Don't forget that this is one of the pioneer crypto exchanges in the world, and being American, and the fact that it had it recently released its financial results, showing that it has about 43 million clients, and also
All right, Olumide.
it's in profit. Yeah, the
Okay.
company is in profit, so it's a good one. Yeah.
It's a big one. All right, Olumide, thank you so much. Thank God it's Friday. Enjoy the weekend. All right, Jimmy, there you have it.
Yeah, thank God it's Friday. I agree
Yeah.
with you. And then for the players in the cryptocurrency market,
Yeah.
perhaps thank God it's Friday. Maybe this weekend might make a great change there. And I don't know if, Ladi, if you read the article there in Financial Times. Apparently, they talked to some youths in Nigeria about their participation in the crypto market, and of course the central bank's directive on the crypto market. And then, I mean, for them, it doesn't matter what the central bank says. I mean, what matters to them is the profits that they are making.
They're getting their bread.
Getting their quick profit. And in an economy where there is no job, what else is left for the youth? And so if they can make their money in a clean way, what more? So that's interesting, to know. Anyway, that's a wrap on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Enjoy the weekend.